All right, welcome everybody to this UX Color, UX Market Flow Google Hangout event. As many know, we do these weekly. And today, what's on the agenda is to discuss world market and market events across the world. Forgive my scratchy voice today, I've been a little under the weather. My name is Adam Kraft. I am the Marketing Director with UX Color. And with me today is Chuck Daner, the CEO and inventor of UX Color technology. What I've got here on the screen is our website, uxcolor.com. There's a wealth of information here, and if you've never seen UX Color in action, I recommend navigating here to the Knowledge Center, right here to the UX Color Introduction and Key Controls, and watching this short slideshow. That'll get you up to speed quickly with UX Color technology, and you'll be able to follow right along with the presentation today. Also, we have the Q&A feature enabled. If you're on the Google Plus page for this event, forgive me, if you're on the Google Plus page for this event, you can select Q&A and send questions, and we'll do our best to answer your questions during the event today. So, without further ado, I will turn it over to Chuck to begin the presentation. Chuck, take it away.
Hello, everyone. Adam, do you have my screen share up?
Yep.
Okay. This is a UX Color map. What I'm going to do is to go through and do a quick survey of world markets. I'm going to start with this US map. This is a UX Color map. This is out of our UX Market Flow Pro product. This is the SP500. So these are the 500 issues that make up the SP500 index. Each row in this map is a stock. Each column is an end-of-day close, except for the far right, and that's the current day price as of the last update time. This map was updated at 133.43. So there's 500 rows. There's the 500 stocks. This is a one-year color window. Important understanding UX colors to understand the concept of the interlace controller, the interlace window, and the bandwidth. This is a one-year bandwidth. It's set for December 9th, 2013 to December 10th, 2014. December 10th, 2014 as of 1:33. 253 trading days. These are the palettes, a spectrum. In this spectrum, red is relative low, white mid-range, and green relative high. So that means green on the right are stocks that are hitting new yearly highs, and reds are the yearly lows. Vertical color bands in UX Color are commonality in time. So here is that these SP500, these are large cap stocks, the 500 largest cap stocks on US exchanges. At the top, if I sort this by market cap, we're going to be using a lot of these sorts, but if I sort this by market cap, at the top we'll find Apple, the largest market cap stock. Vertical color bands are commonality in time. So this is the, we see that the yearly bottom was hit across most of these issues back here, February 3rd last year, February 3rd, January, late January, early February 2014. This is that October 14th, 15th, and 16th downturn that occurred. I can change the color palette if you have a degree of red or green color blindness. These might work better, and palettes can change. This type of palette, this grayscale palette and grayscale spectrum, shows relative banding a little bit better. The Pro product has 14 years of daily data. We also have intraday data. I can scroll back in time, and the reason to scroll back in time is to study patterns in history. Here's the crash of 2008, 2009. This is probably, there's November 20th. Well, one thing to understand about how to use UX Color, let me scroll back a little bit to before that crash occurred. So it's repainting as we move a point at the time. So now I'm before the crash. September 25th, 2008 is on this right-hand edge. I'm going to click that. I'm going to use my cursor, my keyboards, to step into the crash. Now we're watching the crash materialize. And one thing to understand about UX Color, there's data not only in the vertical, the front color wall, but also as you watch this back here, watch how these colors change. So what's happening now, I'm falling off the wall. You'll see that what was white and is now green as I fall deeper. And now I'm still falling off the wall. So now I hit a plateau, a bottom plateau. Now I'm stepping into that crash. Oh, just dropped a little bit more. On December 2009, I haven't hit the 2008. I haven't hit the bottom of this. January now, haven't hit the bottom yet. See, I'm still dropping. Now March 15th, this is about the bottom of that crash. So one of the things to understand about UX color is to understand how patterns and cycles and understand patterns in history. I can sort this by, say, industry. And if I wanted to understand, are there commonalities, how industries reacted? Well, there's an industry that reacted much differently. So now, let me bring this back up to today. Horizontal bands that we see in UX color now are commonality within industries. So this is petroleum refining engineering. And so if I go back to that crash, and I want to see who's coming out of that crash, I wanted to see if there was any industry pattern in that crash. And here's now we're September 8th, 2009. So now pretty much everybody's out of the crash, out of the bottom. And pharmaceuticals came out faster than most other issues. So you learn a little bit from the study and history. So now let's get back to today and what I've been looking at. I'm going to start this out. We're going to sort this by name. One thing I can do with this is I can monitor the market with this UX color map. So this is the issues list. This is the name of, it's in the order that the sort is in. This current sort is by name, 3M at the top. There's today's value. The percentage change today, percentage change span is the percentage change over whatever period this interlace window is. It's a 1-year interlace window. There's the industry, there's the PE, and the dividend yield, and the market cap, and the ticker. If I wanted to find the highest yielding, dividend yielding stocks in the SP 500, I just sort by dividend yield. And at this price today, Transocean would yield 17.45% in dividend. Windstream 10.85. I also have a cold. Let me grab some tea. Sorry. So dividend yield. So Transocean is the top dividend yielding stock at this current price. If I want to understand and monitor the market during the trading day, these U.S. stocks and ETFs, I can do this. I can go data update. That was 133. It went out to our server, got a new price. Now it's at 145. And I come back and I sort by the percentage change right-hand side. Now the column I'm looking at is this column. And so at this point in time, Keurig Green Mountain is up 5.32%. At the other end, Denbury Resources down 9.29%. They're crude petroleum. Most of the down issues. This is that drop in oil prices that occurred. Very prominent. It happened on November 25th. I'm sorry. And so you can see if I sort this by industry, let's sort this by industry, and let's go down and look at petroleum. And there's petroleum. Petroleum and oil and gas drilling, and you can see how prominent that pattern is. Drilling oil and gas wells. And this is Halliburton 47.30%. Let's go out and do this. This is, I wasn't prepared for this, but we're going to do it. This is the UX Market Pro product. We have commodities, futures, currencies, money and treasuries. We're going to look at 15 different countries today. I'm a little bit off track, but we want to go out and look at commodities. Let's open a commodity spot price map. Came up over, oh, let me bring it over here for you. And this is the issues list. I want to find oil, O-I-L. Let's see, there's natural gas. Let's see, natural gas. Where's, how, let's see, there's gold. I don't know why I'm having trouble finding oil. Natural gas, let's just go look at the price of natural gas. There's natural gas, it's dropping. I guess we might not have
It's under crude oil.
Okay, I'm sorry. Thank you.
13 there, I believe, or
Okay.
13, 14.
Okay, I'm going to just click on it. It's going to highlight it. There we see that drop in oil price. Let me zoom in on you. Thank you, Adam.
Sure.
And there's that drop in the oil price. So oil was 77.75 a barrel here, and it dropped to 70. Back here it was, this is the year, we've got a 1-year interlace window. Yearly high, it was 114, and now it's at, and it's at 66. If we want to see it in its 3-year range, I do this. So it's near a 3-year low. 3-year high was back here. 108 was there. And if I want to see a more local view, let's see what it's done over the last 2 quarters. It's dropped. On a 1-month view, it hasn't hit a bottom. It's still dropping and dropping pretty severely. That's a little bit. Let's go back to the stock market. So this is the SP 500 again, a 1-year interlace window, and we're sorted by industry. I want to zoom in and see how this market's doing now. There was that local bottom. One of the things that we look at when we use UX colors, we look at the, let's go back and sort it by name. We look at the commonality or the cohesion of this market pattern. And you see how this is a fairly cohesive market, for at least in the large cap 500. The local bottom was hit back here, October 15th and 16th. Let's just go in and see a 1-month view. A little diffuse. If I come over here to this issues list and I sort this by span, we're going to be going through, and now I've got 500 issues. So at this point in the day, Graham Holding, the percentage span for Graham Holding over this month is almost up 20% over the month. What I want to do is to go in the middle and find 250. Paul Corporation, the 250th stock, about the middle, is up 1.39%. So this market's up over the last month. And I see that it's a fairly cohesive market. And let's sort by percentage change again. Let's go look at what's happening to the market today. So there's that Keurig at this point in time. And dead center in the market, it's a down day for the SP 500. The index is probably down about 0.75% at this point in the day. So that's a little bit about how you use UX color. One thing I want to close with is I'm going to go back. I'm going to take this window and I'm going to move it back to December last year. Let me use the keyboard arrows. I'll use one of these gaming mice and it's fast. So I want to go in and look at this 1-month pattern coming out. So now we're December 20th, 2013. Adam asked about this. Is there a holiday pattern? What happens on the holidays is usually you're going to see the first of the year, you're going to see the market go up. About like that. And if I take it back to another year, let's go back to January, there's 2013, the same kind of pattern. Let's go back to 2012, January 2012, oops, sorry. There we are, same kind of pattern. So if you're looking for year-end patterns, you would probably look to buy around right around Christmas. And one thing UX can do is I can back test. I can go set the time. So I'm acting, this acts like, this is on our website, tells you how to do this. I'm acting like I'm going to buy stocks on December 21st. I'm just left click, hold down, I'm taking it out here. And now things that are green are issues that I would have made money on. And that's a fairly common year-end pattern. I've seen it pretty much across the board for the last few years. Buy right before Christmas and be ready to sell anywhere around January 7th to January 13th. Let's go back to a 1-year window and bring it up to today. And so there we saw the 1-month trend. Now I'm going to get into what this was originally about, and I'm going to bring up some international stocks. So this is Australia, and the thing that I'm going to look at, I'm going to go back to this US map just for a second. I'm going to put this at a 3-year range, and I'm going to sort by the percentage span over 3 years. So this is 500 stocks. What I'm looking at is the 250th stock. So over this 3-year span, these stocks, the mid stock out of these 500 is up 67.28%. Let's go to a 1-year span, resort. It's December 3rd. The resort light comes on because I've changed my interlace window location. I go over here and I want to look at 250. Stocks up 13.90% over the last year. There's no market in the world quite that's performing, except maybe India is quite performing like the US. We'll go look at India in a second. Let's see, I'm at a 2-quarter window. Let's go look at 250 and 7.73%. Market's been strong and continues strong. 1 quarter, and let's go find the 250th. 5.02% up, the mid stock up over the last quarter. 1 month, resort, and it's up 1.39%. So the U.S. market is strong, continues to be strong. It's been strong over the last 3 years, and there's probably no market in the world that quite like it. Let's go back now. Let's take a look at Australia. So this is Australia. Pardon me, I'm going to grab some water. So we're about halfway through my presentation, 15 minutes through it. So December 9th, this is Australia. Let's go look at Australia on a 3-year basis. Sorry. And sort by span. So Australia, there are 334, so about 167 is the midpoint. And for the 3 years, this market's been up about 34.04%. 1 year. Resort, percentage span. Let's go look at the 167th issue. Right there, 3.67%. This market's been strong, just like the U.S. 2 quarters. Resort, 167 is, I'm still on Australia. I've got a bunch of maps stacked up here. I just want to make sure I've got the right one. So over the last 2 quarters, we're seeing some weakness in the Australia stock market. So one thing you look at is the degree of homogeneity. So this market, about over half of these stocks have started to decline. You still have some stocks. There is a stock, Clinuvel Pharmacies, up 167% over the span, and that's the span of this 2 quarters. Let's go look at this market on a 1 quarter view. Resort by span. Let's go look at the 167th, and there it is. So it's down 5.44%. So the Australian market is showing some weakness. Let's see if it's continuing today. Resort. Go look at 167, and it's continuing. So one thing I've seen is that the Australian market showing some weakness. Probably not a good place to invest right now. Let's go out and look at Brazil. Here's Brazil. Let's go back to a 1 year basis. Let's just take a look at this. Let's go back to name. I'm going to show you a spreadsheet that I have that has what we just looked at for Australia for each of these issues. This is a very diffuse market. Do you see how there's not a lot of homogeneity in that pattern? Let's take that pattern back a little bit and see if we can find, is this market always like this? The way we build these international maps is we take the issues that trade on the domestic exchanges. We remove stocks that are domiciled in the U.S., companies domiciled in the U.S. Then we sort by volume and price, and then we pick the top market cap that have passed our volume and our price filters. This, Brazil, is a very diffuse market. See how the pattern's all over the place. Poor, much not the quality of data that we have for the U.S. market. Let me go back when I talk about diffuse. I'm going to bring back up front the SP 500. Here's that SP 500 today. You see how common this pattern is. And that can tell you a little bit about when you have a short-term pattern. Let me sort this by name. When you have a short-term pattern that is, oh, let me just show you what I mean. Let's take a one-quarter pattern on the U.S. market. Very homogeneous pattern. I'm just going to scroll back before we went into that October 15th and 16th. So here you see how this, and what you're seeing here is there's the market starting to break up. Pattern's not as strong. And if you use UX color, what you realize, maybe you will see it more on a monthly view, what you realize is that when you have a pattern that's diffuse, you have a market that's looking for direction. See how diffuse this pattern is? Let's step it forward. So right now we're looking at a 21-day, 1 month, August 18th to September 16th. 3 months ago. I'm going to step forward. I'm just going to watch this. So day to day when you're trading, I'm watching for and I'm looking across the homogeneity of the pattern, because when I see a pattern that starts to break up, I know something's going to move. So this is a pattern that's starting to come back together, and it's coming together. You see it happened right there. We've got a pattern that's diffuse, September 28th. Now you're seeing that it's starting to come together, and it's a downtrend. And usually this signals that now we're going to, if I step forward one more day, it's coming together, it's still going down, more cohesive on the downside. There you see that there's the bottom falling out. October 3rd and 4th. This is the crash. Everybody thought the world was going to end. And you can see, and there you see again, how that diffuse pattern led to, if I was buying stocks and I was back here and I saw a diffuse pattern and I see it coming together on the downside, I'm going to anticipate that over the next 2 weeks this market's probably going to drop more. And in fact it did. Dropped quite a bit more. You would have made a lot of money on this if you'd shorted this. And we just went through. And now you see it's coming back up. And the pattern's strong up. And so that's a little bit how you use the diffusion or the cohesion. I talk about cohesion of a market. I am way off base. So we looked at Brazil. Here's Canada. Let's get Canada on a 1-year basis. Here's the Canadian market. Let's look at it by name. Not as cohesive as the U.S. market for sure. Over the last year, if I sort this by span, and this is, I think there's 600 issues here. There's 600 issues. So this is the 600. We try to build these so they're somewhat synonymous with the SP 500 for the U.S. So over the year, the Canadian market, the midpoint in the Canadian top 600 is 1.65%. Go into 2-quarter view. I'm sorry, resort that. Let's look at 300 here. Down. Canadian market's deteriorating. A 1-quarter view, resort. 300 issue at 1 quarter. Farther down. So the Canadian market, unlike the U.S. market, the Canadian market is deteriorating. And there you see on the last, while the U.S. market is up, let's sort this by name so we don't, you see how the Canadian market, if I was going to look at the Canadian market, I might be shorting some stocks right now. Canada. Let's go look at China. Here's China. Let's go back to a 1-year window. Chinese market, cohesive. Cohesive, let's go back and sort by name. Cohesive, cohesive up. Here's a market that's showing some strength. Let's go look at it in a 2-quarter window. Chinese market showing some strength. This might be a place to invest. One of the things I wanted to come out here with you was to find some international markets. Over the last couple of days, they've shown some weakness where I might invest. On a 1-month window, this market's a little bit lacks cohesion. If there is cohesion forming, it's down. I might expect this Chinese market over the next few days to drop. Let's take a look at France. This is France, 1/4, sort by name. Let me just tell you a little bit about these sorts. The value sort will sort by the value at the right hand of the interlace window. So if I do that, now the top dollar stock out of these is Hermes at 301. I think that's euros. We quote this in the currency of the nation. If I want to see who's the top dividend yielding stocks in the German market, at this point, Bollor, that's probably a stock or maybe a bond. Marco Telecom would be dividend yielding 57.14%. I question that, and sometimes the dividend yielding on these international stocks look a little bit different. So this is the French market. Let's see how it's doing over the last 2 quarters. Pretty much like the U.S. market in that it hit this bottom October 14th, 15th, and 16th. It's not cohesively come out. This is France again, as the U.S. market has. I'm 25 minutes into this 30-minute presentation, so we're going to run a little bit long. Now we're at the 1-month window. A fairly diffuse market. I don't see really any trend in the French market, any trend that I would invest in. Let's go look at Germany. And so the Germans, there's a 3-year view on Germany. This is probably 600 stocks. Let's go see where the 300 stock is. Over the last 3 years, the midpoint in that German 600 is up 39.73%. Let's see what the 1 year is. I resort that. On a 1 year, it's 5.43%. So the last year has been good for the German market. 2 quarters. Just a second.
Well, I'll interject here briefly while Chuck's away and return to this slideshow just until he gets back. Show you a little bit more about the resources that we've got available on the website here.
I'm back. I'm sorry.
Okay, I'll turn it right back to you.
So on a 2-quarter basis, the German market has hit the same bottom that we saw in the U.S. market. Let's go out and sort this by name. But clearly not as cohesive as the U.S. market. Let's go to a 1-quarter view. Hit the bottom, and clearly hasn't recovered. We're not seeing. Let's go back and take a look again at that 1/4 on that SP 500. Let's go back to this 1/4 view on the SP 500. Bring it up to today. You see how strong and cohesive the U.S. market is. And I know there's a lot of people that think the market has hit a high, but when you see a market that is moving like this and is this cohesive, I don't anticipate anything happening to it over the next 2 weeks. Now we're back to Germany on a 1/4 view. A little bit diffuse pattern on a 1-month view, very diffuse. I would say this is a market that's open to taking a direction. I'm going to just step into this. So it was up. Now we're November 17th is our loop, sorry. There's our leading edge. Now we're seeing diffusion. And diffusion in the sense that I'm looking at the cohesiveness of the pattern. This German market looks to me like it's going to go down over the next few days. I wouldn't buy anything long on the German market right now. I'm going to get you through. Let's go look at Hong Kong. Let's look at some Asian markets. 1 year. Hong Kong on a year. Let's sort by name. Hong Kong, a fairly diffuse market. Nothing at all like that U.S. market on a 2-quarter basis. Again, diffuse. only in our map, only 364 issues in this map. And so again, we do a filter on price and a filter on volume. We want issues that are liquid enough that if somebody trades in them, they can get out. So, and then we sort on market cap. This is Hong Kong again on a 1/4 basis. Pretty diffuse pattern. Let's go look at a 1-month basis. And it looks to me like the Hong Kong market is probably on a downturn. One of the most interesting markets in the world over the last 3 years is India. This is India. So again, I've got 14 years of historical data. I can slide the interlace window across that data. And within that interlace window, which now is November 11th, 3 years, I can take the visible window and scroll across that. I don't know if you've seen our video. We have a commercial video Adam made, and we even have a theme song. But he shows this in detail, and it's pretty. So I've got a 3-year color window. Resort India. I imagine this is 600 issues. Is it this? So the 300th issue, the midpoint of that, over this 3 years is 86.89%. Over the 1 year, Resort, 300th issue over the 1 year is up 77.01. What happened in India was Narendra Modi was elected. The Congress Party, the historical old guard party, had the biggest loss ever. The Indian election occurs, biggest election ever held in the world. And it occurred about mid-April. It goes for a month as they move around the country in different polling places. From April 21st to the 14th or 15th of May. And let's go in and take a look. Let's take this window and let's scroll back. Modi won. And Modi, I'm just going to try to get back. Modi's call is an India for everyone, and promoting commerce and industry and harnessing the education. And so the election results were actually announced, I think, on May 19th. So right now, there's May 19th. So what we have here is Indian market is pretty lackluster. Going in, let's at a 1 year, and more people are expecting Modi to win. And you're going to see the market start coming up. Again, I want to say you're seeing the changes in the color, not only the color at the front wall, but also the changes behind as I move that wall forward. So now we're starting to see this market just soar. March 27th, Modi's going to win. Everybody knows it. And Modi's, the business community knows that Modi is going to promote business and commerce, and that day is probably May 15th, 16th, 17th. The election results are announced on the 19th. Now they know Modi's won. And it continues to go up. This is one of the real striking events in stock markets that you'll see. Let's go back and look at a 2/4 view. So that was the promise. And the market continues to perform well. This is a 2/4 view. Let's sort it by name. A little bit of the dream has fallen into reality, and now the reality, can Modi deliver on his promises? A very highly educated population, a lot of technology, and a force that can be a stabilizing force in the Middle East. Neighbors on Pakistan. 1 month, nothing like we're seeing in the U.S. in terms of the cohesion, if anything. So we've seen the steam come off India, and we might see a little bit of a drop, a reset over the next few weeks. Let me go back and another startling event. Here's Russia, and this is the Russian market, and this is when they invaded the Crimea. Whereas India went up, Russia went down. And let's sort this by name. And if I want to know how much has the stock market dropped from just before that Crimea event to today, I do it like this. I can set the time. I'm setting my interlace window. Now I go out and I sort by the span. And this in this map we have 194 issues, so right about 97 is the midpoint. Let's look at 96. And so probably over this period of time, since they went into Crimea, the Russian stock market has lost probably about 10.9% of its value. Let's go see if it's stabilized. Not much. Let's go back and sort by name. Let's look at the 1 month view. The markets continue. The Russian market's continuing to deteriorate. Close to having an economic crisis on their hands. So Adam, I'm 35 minutes into this. Let me close. I didn't get to show you all the countries I wanted to show you, but let me show you something. And so I'm going to run through this slowly. So what I've done in this spreadsheet, this is the country, Australia. There's 334 issues. The mid issue would be 164. So I looked at it. I was doing some of this as we were going along. The mid issue on a 3-year basis is 39.25% up 3.7% on a 1 year, down, down, down. So you see the Australia market deteriorating, Brazilian market deteriorating. It's been down. It continues to drop. This is Canada. And we saw that. There's the Chinese market. The Chinese market is strong. You know, it's a place that if you had invested over the last quarter, 5.73%. France, weak. There's Germany, weak, but Germany's recovering. France is recovering. Hong Kong continues to be weak. I'm going to scroll this up and down so you can see it. India, that's what we just saw in India, that the steam is off. Over the last month, that mid-issue is down. Over the last quarter, it's up 5.74%. And there's the Russian market, continues to drop. Japan, a strong market. Let's go back and take a quick look at, I don't think we saw the Japan map. Here's the Japan map. Oops, let's get a 1-year view on it, sort by name. Let me scroll this out. Let's get this spreadsheet. I think you all had enough time that you can go back and take a look at that. I just want to minimize this. Take a look at what happened on that. Here's Japan. Oops, sorry. Let me get it back for you. Here's Japan. That's Russia. Sorry, I'm coming. Japan. Okay, here's Japan. And what I wanted to do is just widen this so you can see all these issues. 600 issues there. Pretty much like the U.S. market. Japan is interesting in the sense of, let's go do a 1-year view. And Abe economics. So I'm going to take Japan back here. So Japan was in 20 years of stagnation. And Abe was elected. Let me get into a 3-year view. Abe was elected, and now I'm looking at the change. This is when they announced that they were going to create stimulative monetary policy, monetary easing, and the market, let's get into a 1-year view and go to that point in time. So this is a 1-year view. We're looking at August 2014, and the market's going up because the monetary stimulus is coming online, and now the monetary stimulus is taking hold, and the market starts to soar a little bit. As Abe's elected, there's that market soaring. As Abe's elected, But if you come up to today, where we are, you'll see that the market's still going strong. So, Adam, I think I'm going to stop there.
All right. Thank you for the presentation. I'm going to wrap this up quickly. I just want to once again go back to the main website, uxcolor.com. Encourage people, if you have any feedback for us here, you can enter feedback about this presentation. Anything you'd like to see in future presentations. We do these Hangout events every Wednesday at 12:30 Central Time. We'd be happy to take any feedback that you have or any recommendations for future presentations or any questions and answer them in our next presentation.
Adam, can you step through our products a little bit?
Sure. So here are the products tab on the main website here. I'll just begin with covering what Chuck's been using for this presentation, and that's the UX Market Flow Pro product. That's got our full finance catalog, and that's the UX Market Flow catalog here. I'll let you research that because it would take some time to go through all of the data in that catalog, but there's 14 years of data across U.S. and world markets included in that. So back to the UX Market Flow Pro product, also commodities, ETFs,
currencies,
thank you.
Treasuries, money market instruments.
So this is the product Chuck's been using, the UX Market Flow Pro product. As you can see, there's a 1-week free trial. So I encourage anybody that's interested to come over and try the 1-week free trial. You can subscribe here for the free trial.
It's a month-to-month subscription, so you can cancel at any time. Think of it like Netflix.
Yeah, absolutely. So the other product that we offer is what we call UX Color Custom. In the UX Color Custom product, you can link any sort of proprietary data into the UX Color Custom product. As Chuck frequently says, the more data you have, the more value UX Color can add. So we've been using the finance data in the UX Market Flow product for this presentation and looking at world markets. But UX Color can be configured for any data. In fact, we can pick up data out of CSV or flat files very quickly. So even if you just have a data set and you're curious about how your data set would look in a UX Color map, I encourage you to contact us. That's something that we can do very quickly, give you an opportunity to review your data in a UX Color format and decide for yourself if it adds value and knowledge to your decision-making process with your data. And then last but not least, we have the web-served version that we call UX Market Tracker or the UX Color widget. And this is browser-based, web-served. You could use it on an intranet. We license this UX Market Tracker product for websites, or if you wanted to use proprietary data across your intranet, it could be set up to do that. As you can see, this is a kind of a slimmed-down browser-based version of UX Color technology, where we can change the color range, change our pattern spectrums, and we have to choose from the Dow Jones 65, the NASDAQ 100, and the S&P 100 here. I point out that the UX Market Tracker is available now on the website completely free. So if you're interested in just poking around and taking a look at UX Color and seeing what it looks like, I encourage you to come over and take a look at the UX Market Tracker today. All right, anything else you want to add, Chuck, or anything I missed?
No, I'm sorry we've gone so long. I need to be a little more concise. Thank you all. Thanks, Adam.
Thanks, everybody.